We are very much mindful of the fact that part of the motivation reasons for our gathering here is to be better equipped in our fields of endeavor, to enhance and embrace our position in the technological advancement to achieve success, get far ahead in the competitive world that is becoming keener and keener as the world shrinks more and more to a global community. Hence, we carefully chose this subject of deliberation in this year's EOBS conference, reflecting in the theme Unlocking Ghana's Economic Potential with Mobile Money and Payment System.
Private Enterprise Federation, commonly known as PEF, was founded in 1994 as a private enterprise foundation until 2013, after a restructuring exercise, slightly amended its name to Private Enterprise Federation. The core function of the federation, among others, is to forge consensus among various private sector interests and to provide a leadership voice for advocacy on behalf of the private sector, aimed at ensuring economic growth and development.
Transaction limits have also been imposed on different customer categories. Permissible transactions have been defined, and transactions that can only be provided in collaboration with banks and insurance companies have been clearly spelled out. Second is that enhanced access points through the use of agents network to facilitate transactions in digital payments across the country. These have also been catered for under the electronic money agent guidelines. Third is that customer funds held in electronic money accounts are safeguarded by requiring the equivalent fiscal cash to be held in a bank.
As of November 2016, the total telephony subscriber nationwide was around 38 million. Out of this subscription rate, the mobile money platform recorded a total volume of about 550 transactions with a value of 7 million as at the end of the year 2015, and this has grown to some 1.3 billion transactions in 2016.
Mr. Chairman, the government of Nana Akufo-Addo is pro-business. It goes without saying, and we have made it a point that we want to build the most business-friendly economy in Africa. We are therefore keen on developing the financial sector to deepen financial inclusion and bring more Ghanaians out of extreme poverty. This informed the decision of the President to abolish the 17.5% VAT on financial services as announced by the Minister of Finance in his budget, which was presented on the 2nd of March. The abolition of the VAT of financial services is meant to encourage the development of financial transactions and mobile money, because research has proven that countries with strong financial systems also experience strong economic growth. Interoperability, or the ability of a subscriber to send money from one network to the other, should be possible in Ghana as a matter of course, as it is in other countries. This is a very important issue, and it's an issue that we should really, all the stakeholders, turn our attention to. Ghana is really a blessed country when you look at the financial inclusion architecture in this country. The banks are there, the mobile companies are there, the central bank and the GIPS, the payment system architecture with eSwitch, which tries to target the unbanked. So we have, an architecture that, quite frankly, I don't see in any other country in Africa. I really don't see it. We have been blessed with a major architecture which have been developed separately. The eSwitch architecture is very, very important. The telcos have an architecture which is very, very important. The banks have an architecture which is very important. What we are lacking is interoperability.
I think there is space for the regulator, because if you don't know what you're doing, you can cause a lot of shocks and damage. Fortunately for us, we had some good industry experience, and so we were bringing to bear that experience in developing the solutions we put out there. And that was even one of the reasons we said, let's engage the regulator early. So as early as 2012, we were already talking to the regulator, and we go by every now and then. As mobile money started to take off, for instance, we approached them and said, hey, we're not really an issuer. So everyone knows they've sort of released e-money guidelines. And we said, we are not an issuer, but we are facilitating transactions. So we don't really fit in there. And the good thing is, hopefully I can say this, but I know the BOG is now thinking of revamping what that regulation looks like to encompass companies or institutions like us, because we are not the traditional model. If you try and sort of use a cookie cutter model, I think there's a lot of value that will be lost.
And we've moved along with our partners, including the banks in particular. We started with 9, we now have 16. And along with that have come other initiatives. And today you are able to buy treasury bills using your MTN mobile money wallet. You are able to set up a basic savings account with a bank using your wallet. You are able to connect your wallet to your bank account for bank customers, so that from the comfort of your home, you can actually either move money from your bank account to your wallet for the next transaction.
And with our role as a central bank in this space, in our guidelines, we have indicated requirements for infrastructure deployment, and the security is key in this. And it will interest you to know that we request for detailed IT infrastructure architecture, functional ones as well, DR site issues, all of them detailed, and we will always want to see the demilitarized zones, the firewalls, and all these things in place. And we'll look at the transaction flow from the business perspective, and also see where security issues arise and measures that have to be put in place to address them. And some of these applications, initially when they submit them, they complain, oh, this thing is delaying. But when we begin to write to them, you have to address this, you have to address this issue, then we give them opportunity for them to do a presentation, and we go through everything with them to help them, so collaborate with them to address some of these things. And I would say that it is a wonderful development in this country that we require our payment service providers to be ISO 27001 certified, and GIBS was the first to do that, I think in 2000, and I'm not so sure of the year, but MTN and all these entities are on the same path, and they have their certification to ensure that they have adequate security measures in place to protect the environment.
Currently, we are trying to promote financial inclusion, as the Vice President very eloquently addressed, especially bringing in the unbanked. And so if somebody does not have a bank account now, and probably has never had a bank account, but he or she happens to have a phone, and is using that phone to do some financial transactions, then is he or she really a customer of a bank that is yet to sign up for a bank account, and therefore somebody is eating his lunch before he can become a bank customer? Or is it that the telcos actually are bringing in these financially excluded people to become potentially eligible for formal banking services, depending on how you see it?
Banking is reached the edge of the river, but there are customers on the other end, across the pond, across the stream, where EMIs have the flexibility, the nimbleness, the technology, the points of sale devices, terminals, banking hall, so to speak, in the pocket of potential prospective customers. Right? And the EMIs, therefore, have this flexibility that the banks don't have. It simply just makes common sense to piggyback one another, to piggyback each other across the pond and enable the banks to reach customers they previously would otherwise not be able to reach.
In fact, it's been close to 20 years, based upon my experience sometime in Canada, as most of these tech companies emerged. Basically, any company that holds data or has a number of customers, they felt that they could begin to offer banking services to the clients. And this phenomenon now is not new. I mean, it's happened as Facebook and some of these big tech companies emerged over the years and controlled a number of customers. They felt they could get into banking services. It's not only that. Even if you look at some of the major, what would I call it, shopping companies in the US. Walmart, for example, had a lot of customers and thought they could go form a bank. And so in the US, they tried to form Walmart Bank to various degrees of success. So clearly, yes, there's opportunity to collaborate and to be able to provide banking services to customers, because ultimately the goal is to get a customer and, of course, the services that the customer requires. So this is not new. So I personally don't see it as a threat.
When you look at the various growth sectors within this, it's page 157 on the budget document. It tells you the real GDP growth rate of all the various sectors since 2007. And consistently is the telecommunication sector that has outgrown all other sectors over this period, followed very closely by the financial services. So these two sectors are the biggest drivers of our GDP growth. We keep talking about that. I know we should invest in agriculture and all of that, but the numbers don't support it. If you look at how this country is growing today, these are the two sectors that have consistently outperformed all other sectors. If we collaborate, it means that we will remain pivotal to the growth of the country. And if the pie grows, everybody grows. Nobody would be eating somebody's lunch as long as the pie is growing. It is only when the pie is not growing that we will be arguing about whether somebody is eating my lunch or not.
It will surprise you, the PwC banker survey done in 2016, a huge percentage of the respondents actually saw more money as competition. And the products that they saw to be competitive were the small value transactions mostly. So the bill payments, which were small value, the remittances, local remittances, which were small value. So those were the ones seen as competition. But the question I ask myself is that if you look at the mobile network operators, they have over 150,000 points of outlets that you can access their services, and eventually you can access mobile money through those channels as well. And those customers that access the services at those channels eventually have their money sitting at the bank, so it's a complementary service at that point.
In line with the valiant theme we have here today, unlocking Ghana's economic potential with mobile money and payment systems, we at SIST are proud to tell you about our flagship product, Mazuma, which is an online payment system that focuses primarily on mobile money, a channel we believe can and will truly expedite the nation's initiative to achieve full financial inclusion in a utopian cashless society. With our partnerships with MTN Mobile Money, Tigo Cash, Vodafone Cash, as well as Airtel Money, we have been able to aid merchants such as Samsung, Python, and Silverbird to receive digital payments nationwide through our web-based platform.
We move on to automated clearinghouse. That system lends itself to two services. The ACH direct credit, where if you want to make bulk payments, if for example I want to give you all 100 cedis, I can instruct my bank, I believe you all have bank accounts, then I can instruct my bank to debit my account with the total amount and credit each and every beneficiary here. Before the ACH direct credit was put in place, most of the transactions that were done were using the RTGS at the central bank. What they do is that they send a bulk amount from bank A to bank B and follow it up with an email that this bulk amount that was sent to you, give A 500 cedis, give C cedis, and give D 400 cedis in that order. So there's no way you can uniquely identify who the beneficiary is. All you see is a bulk amount from one bank to the other.
Not too many years ago, when voice came, we had issues with quality of service, and you could call a number and get an information telling you that the number you dialed does not exist, when you know in actual fact it exists. It could be a number you very well know. And my father would not accept that. You see him shouting at the phone that, my friend, you are lying. I just spoke with this person a while ago. So you can't tell me it doesn't exist. But we have moved from that. We've improved on the quality of services that the network operators offer. And therefore, we still continue as the regulator to ensure that quality of service up to standard, so that mobile money or digital financial services can go on effectively.
Our focus is on corporate payments or on merchant payments. We believe that the next wave of mobile money payments will, which primarily right now is made up of P2P payments, but the next wave will come from merchant payments, what I call the many-to-one. And we think there is a huge need to address that market. And as a payment processor, our thinking is that if you're doing 10 transactions a day, you can do it manually. But if you're getting into the many-to-one transactions, and you're going to be doing 1,000 or 10,000 or 500,000 transactions, then you need a system which gives you some sort of billing and tracking and reconciliation to enable you track it. With financial inclusion, which is a very big move for us, of course, because primarily the economy is highly informal, we are highly unbanked, and more importantly, we believe that people are earning daily incomes, okay, and therefore can only afford daily payments, and that's the issue of nano and micro payments. And so we're helping to bring payments for insurance, for savings, for pension down to a daily basis.
Talking about today's topic, that is the technological backbone of payments. We can't talk about backbone without understanding the architecture of the backbone. So at the architecture, we have at the base level the banks. They are the people moving the money, the banks. They are the foundation of every financial system, the banks. On top of the banks, we have the telcos, such as MTN, Airtel, Tigo. So the banks enable the telecommunication companies to access mobile money services. So when you have a mobile money account, it's actually a virtual account that is in a pool in a bank. So on top of the mobile telecommunication companies, we have the payment systems such as Mazuma, ExpressPay, SlidePay. So we sit on top of the telcos. The telcos give us something we call APIs. I don't know whether you've heard of them before, APIs. So these APIs enable us to talk to the telcos, which then move money from one bank wallet to another. So that is how the backbone works, from a bank to a telco to a payment system.
I think we need a policy for government to step in, work with the Ministry of Finance to ensure that we educate everyone in the country about the technology, the services, the e-services that are available in that regard. On that note, I'd like to thank everyone for their time and look forward to us all working together in the next 6 to 9 months. Thank you.
Thank you very much. All right.
As such, these technologies have the capacity to disrupt businesses, market, and industries at a pace that has never been experienced before in human history. Banking and financial services in general are certainly not the only industries experiencing the impact of disruption. But with tremendous growth of fintech over the past decade, banking and finance will continue to transform at an ever-increasing pace. Nowhere are the effects of this disruption more likely to be felt within the banking and finance sectors than in Africa. And then just to end with an excerpt. By the way, based on an emphasis survey that was included in that article, the biggest concerns that folks in the banking sector have about disruption are actually they're not mostly concerned with the telcos. They're mostly concerned with startups and technology companies. I didn't make that up. That's according to a survey of professionals in the banking sector. Okay? Telcos come number 3, 45% tech companies, 32% startups, telcos, then retailers and insurers. That's what banking sector professionals are concerned about in terms of disruption. And we're interested in solutions that translate into commercially viable solutions and products for banks that will endure, even during times of unprecedented change. The market is watching Africa with interest as some of the most conservative and profitable banks in the world reposition themselves. I'm certain that many members of Africa's banking community are rightfully concerned about how disruption will impact their own future. But by embracing exponential and exploring new ways to make life better, we can collaborate on innovative ways to turn threats into opportunities. I've had a glimpse of the future, and it looks bright.
So the future of payments, we think, will be the future of everything else. Everything is going to dematerialize, and the way that we serve our customers is going to evolve. I think that you shared some of these ideas already, but since I have only 2 minutes, I like to call this infrastructureless scaling, which means that we can all scale globally by using infrastructure on demand, provided that the infrastructure hits a critical level where we have a complete digital platform on which we can transact our business.
Now, you notice that I was looking at the 2016 mobile payment report, and actually, if you look at it, mobile commerce was only 8% of the total. And so clearly there is a big opportunity to help raise revenue, to be able to meet all the aspirations of the stuff we've talked about today using mobile technology. It's not only mobile, but basically digital payments. And so what we are looking at to be able to use big data analytics, and clearly that depends on getting a lot more people to be able to use these networks, and that would mean that we have neutral networks where I can be able to do transactions irrespective of whichever network a person is on, to be able to reach government.
And let me thank the chairman and the board, the management of ABM, all our sponsors, all the speakers, all the moderators, and all of you for joining us here for a very wonderful interchange and exchange. And let us hope that we go home feeling refreshed, fulfilled, and that tomorrow, as they say, when the cock crows, it will be ABM and its sponsors and partners thanking you all for joining us here for another wonderful economic outlook and business strategy conference. We conclude by actually taking some pleasure in the new tagline, which I think the Vice President himself acknowledged, that these EOBS series are now becoming the Davos of conferences in Ghana. Thank you very much. Cocktails are now being served somewhere, so the ushers will help us get a drink. Thank you.